And the vaccine, boy, what's going on here? What is going on here?
I don't know, bruh. The mentors are not here.
It's been over 40 minutes now.
Yo, guys, calm down, guys, calm down. So what happens is that we're having technical issues, like electricity just comes back on and shuts back out. So it's kind of confusing what's really happening with the electricity. So the minute it shuts down, it kind of switches off even the Wi-Fi. So it just shuts out of the Zoom session. But I hope right now it's back and it will be back for good, so that we can continue with our class. So yeah, that's what's happening. I don't know if everybody can see my chart. Can everybody see my chart?
Yeah, yes.
All right, cool. Sorry about that, guys. I really apologize.
No problem.
Some things we have no control over, so please just bear with me. Some things we don't have a control over. Electricity, when it switches on, I don't have control over it. So, okay, guys. So basically what our, you definitely see me. Okay, cool. You'll see me one time. So basically, guys, as you can see my chart right now, you can definitely see what's happening. So the market was somewhere right about here before I took this sell. So before I took this sell, I said to myself, okay, cool. When we go on a 4-hour time frame, you would see that there was a market breakout, right? And the market came back over here. But a lot of people assumed that the market is going to be retesting. One thing I've learned about trading is that the market is not always picture perfect, but there's a breakout and a break in. So the minute the market breaks inside a trend again, this means it wants to respect the same trend. So this is what happened. As you can see, the market kept on pushing. The market kept on pushing and then it went inside the pattern, right? So if we can look at the overall day, we were in a bearish trend. So on that bearish trend, what really happened was that the market broke out and actually broke inside again. So the minute it breaks inside, I was like, okay, so we have eventually crossed this level over here, right? As we have crossed this level over here, this means now the only way to is to the downside. The only way is to the downside. So I was like, okay, but let me be patient instead of executing a trade with immediate effect. And then the market continued, the market continued, the market continued. So for me, instead of this being a breakout and retest type format, I decided to see it as an impulse and a breakout, an impulse and a correction with a bearish continuation pattern. If you have our course, guys, you'll definitely know the terms of these words like bearish continuation pattern, bullish engulfing candle close, falling wedge, and all those type of patterns we use in order for us to trade. So as I push the market even further, you start seeing what really happened. So at this current level, I actually said to the guys, okay, what I'm seeing here, it's another level of a pattern. So this is a small version of a pattern. Now it's time to remove this because it's going to kind of distract us from analyzing and seeing the market in a pure format. And then when you look at it as well from here, so this was a bearish continuation pattern, because if you can look at it, this is an impulse, then this is a correction with the retest, then it's a continuation to the downside. So now here's the psychology where people were played. As the market keeps going, you can see that it doesn't clearly show where it's going, right? So it actually triggered me in with the people, right? As it triggered me in with the people, everybody started assuming that the market is going to be buying. I don't know why. I don't know why they did that, but because I know the structures and the patterns that are formed by the markets, I actually knew that this will definitely be respected one more time. And then as you can play it further, psychology kicked in. Obviously, as you can see, the market had a huge spike to the upside right there, and then it actually came back. But let me actually use it on a 1 hour time frame so that everybody can be able to see what do I mean with these things that I've seen. So on an hourly time frame, I'm just going to zoom it out. On an hourly time frame, zoom in over here. So the market kept on moving. So as the market kept on moving, you can see, guys, instead of it going down, it's actually going up. This is where the emotions and the psychology kick in, because you start assuming that you took a wrong trade. But bear in mind, I have my stop loss right in place. So this means whatever that happens doesn't scare me. As you can see, I've highlighted stop loss, I've highlighted take profit, and also I highlighted take profit. You will definitely see that these take profits were hit even before the time came back, right? Everybody's going to see that. These take profits were definitely hit. All right, cool. So the market kept on playing around, right? So now finally we're breaking below. So instead of saying, Andy, let's execute immediately, this is when I noticed, guys, the lesson for today is that, guys, don't always use market execution when placing a trade. Sometimes market execution can put you in a drawdown that can blow your account, that when the prices get back to normal, you are already out of the trade. So that's what I actually want from you guys starting from today. Start practicing how to use the market orders. It being a buy stop, it being a sell stop, it being a buy limit, it being a sell limit. Please, guys, utilize all the equipment, or rather the instruments that we have, towards making sure that everybody becomes a profitable trader. Because one thing I've noticed about most of you guys, when I actually answer questions on Discord or kind of like engage with you on Discord, I noticed that a lot of you people are affected by entries. Not that you don't know how to enter the market, it's just that you always have early entries that lead you to a huge drawdown that when the market kicks back, you are unable to keep up with it. Just for an example, imagine if, guys, I entered my sell over here, right? Let's assume I entered my sell over this price over there, right? And I'm just going to make it a bit thick so that probably will make sense. So let's just assume I put my sell right there. And then the market was somewhere right about here, right? It's straight facts, and it's something that I cannot cheat, that my emotions were going to play with me. It's something you can't cheat. Forex is meant to play with your emotions. As I continue moving, you start noticing that I'm not making any profit. So I'm thinking, you're going to panic. Oh, fuck, what if this is a double bottom? And then you start closing your trades, and now entering buys. The minute you enter buys, that's when the market does this. It comes back again. It comes back again. It comes back again, just plays around, Do you understand? Now, if you can look at it, it's moving on sideways. It's consolidating. It's not clear. It's not really clear. It's just there to play with the emotions. Bear in mind, you have closed your sells because you are so quick to jump into the market that when you place the buys, now the market starts selling, right? Now the market starts selling. Do you get me? But my sell stop was somewhere here. Yeah. So, okay, cool. And then I was like to the people, you know what, guys, let's place a sell stop GBP USD 123, 123. And then let's look at what the market did. The market triggered us in. Automatically, when the market triggers us in over here, as you can see, we are already inside the trade right now, right? As the market triggers us in, looking at the chart pattern that is being created, you would notice what I predicted before by saying, guys, there's an impulse, and then there's a correction, and then there's a continuation. Those are the most simplest basics, but people actually tend to neglect them, and they're actual ones that will make you be very much profitable than everything if you understand your corrections and your impulses. Now, moving forward, we start profiting. Now the market starts moving funny. If we can look at it at the current level, it was consolidating. So we were trapped inside an emotional type situation. So when you're trapped inside an emotional type situation, that's when you don't know what to really do. But what do? We keep on holding our trade. So as we continue holding our trade, if we can look at it, there's a point where the market started wanting to neglect up until our take profit one was hit. So automatically you can see over here that our take profit one was hit. So when the take profit one is hit, this is where we adjust our stop loss and put it maybe somewhere right about here, or rather on break even. Bear in mind, we still have a take profit two to hit, right? Sorry about that. We put our stop loss right there. We put our stop loss right there, as you can see, and then we hold again. Then the market keeps playing, and then now take profit is still hit. And then we put another, sell stop over here and put our stop loss over probably up on the stop loss we have for scaling in. Bear in mind, guys, you don't scale in on impulses. You only scale in on corrections. A lot of you all get it wrong because you think you definitely scale in on impulses. Don't ever do that, guys. We only scale in on corrections. So as you can see right now, before I even move further, this price over here, it's forming a continuation correction. So now as the prices keep moving forward, you start seeing we are triggered into the trade. But now as we are triggered into the trade, you can see we actually starting to be even on more profit, right? So now as it triggers us in, what do we do, guys? Once you place a trade, hold it and see where it takes you. And then when you notice sooner or later, take profit 2 was hit. So what I've learned that guys, you should do, please guys, there's definite timing into entering trades. What I normally like saying is you can choose trading on a New York session, you can choose trading on a London session, you can choose to trade at any point, at any time, how you want it, and definitely how you basically feel like it needs to be. But always remember, it is not always the option for you to actually execute trades on a market execution. Using your sell orders, your stop orders and everything is very, very important because sometimes it actually will save you out of risky trades. Let me make an example about one possibly I can find over here on my chart list. One I could find possibly. Let me go to GBP, JPY. All right, cool. You see, so now GBP, JPY at the current price, guys, I'm just going to use the current price over here. Before prices reached that level, we would possibly have thought that out of a daily time frame that we had, you would actually have thought that this is going to actually turn over here, maybe spike down, and then it's going to now go for sales, for buying opportunities, right? And then when you assume that it's going to go for buying opportunities, then you place your trade, right? And then bear in mind what's going to happen. As the market keeps moving, now the market is on losses. You get it? Once it's on losses, you start questioning trading again. But the simplest way to save yourself, you can actually say to yourself, okay, Andy, we're seeing buying opportunities on GBP, JPY. But what we should do is actually putting our buy stop. A buy stop needs to be at the place whereby you definitely know the market would never come retest at that level or come back to play at that kind of level. So that's when, if I was to play my buy stop, I would place it over here and have my stop loss over there, and then look for the potential swings. Because why? The first rule I've learned in trading is that you need to know the type of trader you are. So for me, I'm a swing trader. So this is possibly a swing trade from this current moment. From this point, this will possibly be a swing trade from this point up to that top point. So that's what I wanted you guys to learn for today. Guys, don't always use market execution. It's important to utilize all your instruments, pertaining it being sell stop, pertaining it being buy stop, it being buy limit, it being sell limit. Just make sure you try utilizing all your execution instruments. Any further question? Any questions, guys? What's the limit between a buy limit? What's the difference between a buy limit and a buy stop? Okay, cool. Let me just utilize a blank chart. So the difference between a buy limit and a buy stop is that there's impulse, there's correction, right? So if there's an impulse and there's a correction, a buy stop is a level where you say, if the market crosses over here and it triggers me, a buy stop, it's a continuation. A buy limit is a reversal, right? As I've taught you before, guys, that we have an impulse correction, impulse correction, impulse, right? So in this manner, if we put in a buy stop over, maybe let me just say somewhere right about there. Let me say a buy stop somewhere right about there, right? The buy stop is actually you saying the market, once it gets to this point and triggers your buy stop in, is going to continue to go up. So basically, that's what we're saying, that buy stop is continuation, but a sell stop is reversal. I mean, a buy limit is a reversal, right? Let's assume the market in an impulse correction, a correction there, and then impulse to the top, double top type formation, and then that type of comeback, right? Double top type formation, and then that type of comeback. Sorry about that. Yeah, so let's assume that we have something like this, right? Let's assume we have something like this, and then here it's a double bottom type formation. Here it's a double bottom, it's a double top, sorry, double top type formation, and then the market goes down, right? Not even go down, right? We have a zone over here. So we've been going up, if you can look at it. We've been impulsing, correcting, and now you are assuming that, or actually our probability that this is going to be a double top. Bear in mind, we're still in a bullish momentum type of channel. Us saying this is going to sell from here, it's actually us trying to catch a reversal, right? From here to there, and then this was bullish. Now when it returns, or rather when it changes direction, it's going to be bearish. That's what a buy limit is. A buy stop is continuation. A buy limit is reversal. Yeah. So that's the answer to that. And then I've already explained, how do I know the difference between knowing when to cut losses and just letting trades play out in case it comes back? How do you know is that, guys, that's why you say use a stop loss, right? If you're not a person who uses a stop loss, automatically you've set yourself up to failure. I'm not saying you're going to fail if you don't use a stop loss. I'm just saying a stop loss is there to make your life easier, because you don't need to always go back to the markets in order for you to moderate your trades, or rather just like it doesn't require a lot of effort, you know. So that's it. Can you do a few examples on entering using a buy stop and a sell stop? As I've said, if I use an example, if I use an example, it's not going to make sense. But when you understand reversals and you understand continuations, you would understand that when we continue to the market, it's actually the market. Let me erase this again. A buy stop is something of this nature. Impulse, sorry about that. It's an impulse, it's a correction, it's an impulse, it's a correction, right? Because now we had the first correction and now this is acting as a second correction. We put our buy stop so that the market can go up because it's a continuation. And then when the market triggers it, it goes up, we have actually called a buy stop. A sell stop is when the market is bearish. Impulse, correction, and right? As you can see over here, and then we're gonna put our sell stop over here so that when the market triggers the price, it can actually sell. This means we have caught the continuations of sells. So that's what's the difference between a continuation pattern and a reversal pattern. I have need to ask a specific question based on GBP JPY. Okay, what's your question? What is your question? Okay, Ruben. I'm trying to unmute Ruben. Ruben, I've asked you to unmute.
Thanks, Andy.
How are you, man?
Good and yourself?
I'm good, man. How can I help you today?
I'm a swing trader just like you. Actually, I took the same trade, GBP, JPY. Fortunately, it's also in profit. My question specifically is, you used the example when you were explaining that you're a swing trader. The level that you assumed or you expected the price to turn and go back into a bullish direction, what's your decision based on? Why do you think it will turn at that level?
Okay, so this leads me to actually analyzing again, right? Okay, cool. Let me show you. So from a daily time frame, if you can look at it,
Yeah.
This is what we had, right? This is a daily time frame. This means we had
Exactly,
a most probably
yes.
type of parallel line towards that level. But now it can't be equivalent because this is now turning into an expanding type channel, right?
Correct.
So if
Yes.
it's turning into an expanding type channel, I already have seen what's the overall type of momentum. So already I will cater for the median level. So the median levels is actually the sensitive areas that are in the middle, as you can see, right? And then dropping into a 4-hour time frame, I start reanalyzing the market again to see what's the market going to give me, right? And I can genuinely see from this point, it didn't actually end up making sense, because what's making me see the possibility of it turning back is this level over here. So it's actually going to sell. That's good.
Yeah, but why
Just wait a
do you
second.
assume
Hey,
that?
wait.
Go on.
Okay, no, not a problem. So from this moment to here, it's going to be selling. What's making me see buys again? It's it hitting this level and coming back towards this again. This will be a possible formation of a new channel. Do you understand?
But why not the supporting resistant line based on daily time frame? Yours, the blue line, actually, your support is actually at a much lower level compared to where you currently are.
That's because of the type of trader I am. The reason why, look at this. For me, 2 touches confirm a sensitive area. But if you can look at it, at this current level, we kind of had a double top type formation, right?
Correct.
But what I've learned in trading is don't neglect sensitive areas. This area over here, it's very sensitive for the fact that the market can play around it for the longest time. For the fact, sorry about that. For the fact that the market can play on this level quite oftenly, it clearly states why is this level very important. Because look, number one, it turned over here, 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 it turned again over there. So this will also be a possibility of an inverse head and shoulders, possibly to the upside. So there's a lot of possibilities. So what I'm saying is my probability is that when the market, when it gets here, it's going to buy a bit.
I think